Hello, good weekend to all. This is a review of the US markets for the trading session Monday the 8th of March 2021. Please be sure to visit my site www.inter-marketanalysis.com. I'm more active on Twitter, so you can certainly follow me on there at the Twitter handle at trader_adil. If you want to join my live analysis service, find details on my website. And if you are interested in the mentoring program which I run for the intermarket analysis method, be sure to check me out on my site and email me or contact me via Twitter, etc. Okay, so let's get started here then. Okay, in terms of US markets, so basically the whole focus this week, or the week that has just gone past, basically has been the bond market. So let's bring up the bond market here. Okay, so there's a 10-year Treasury note, 10-year T-note. Okay, so you've got a break of this key level at 135, which obviously triggered the taper tantrum, if you want to call it, or a hawkish Fed, if you want to interpret it as well, given the fact that Mr. Powell certainly didn't push back, and he certainly embraced a more hawkish stance going forward in terms of inflation, obviously being a concern. Bonds obviously are discounting that in, given the massive fiscal stimulus is obviously inflationary. Oil prices obviously have been pushing higher, copper prices pushing higher, commodities in general are pushing higher, which obviously hurts growth going forward, given the fact that obviously the inflation concerns certainly are rearing their head. Previously, monetary policy has failed to trigger inflation because a lot of that has been discounted by, whether you want to believe in that or not, okay, robotics, automation, etc., etc. And obviously the old argument of whether or not obviously QE is actually inflationary at all. Okay, so it looks like fiscal stimulus and QE together certainly is triggering that, okay, and obviously there's a concern now going forward in terms of the stimulus checks, given the fact that obviously so far the stimulus has helped the rich people get richer, whereas the poor people unfortunately have got poorer. Okay, so nevertheless, a break of that 135 level, obviously bond prices falling, which in turn sends yields higher, which in turn forces the Fed to obviously take a more hawkish stance, which in turn obviously has led to the dollar rally. So the next potential support is not seen until 130 now, so therefore expect bond prices to keep falling. The philosophy in terms of the latest article over Bloomberg, stimulus fueled risk bounce likely to come with higher yields. Okay, so risk assets are poised start the week with a spring in their step at $1.9 trillion economic stimulus plan approved by the US, and a surge in China exports boost confidence in the global economy. So Chinese data as well certainly helping over the weekend, and that'll be interesting to see how the market interprets that. But nevertheless, for now, we certainly have seen one hell of a sell-off in the bond market, yields obviously spiking. Any pullback there will obviously help the equity markets, but is that going to be sustained? Certainly not. Okay, so keep an eye on that. Okay, so in terms of the dollar index, let's quickly give you an insight here in terms of the US dollar here, because again, dollar will be very important in terms of the next move. Dollar is actually into resistance, so just bear that in mind. A sell-off in the dollar obviously will help US equities. Obviously, a rally in the bond market prices obviously will ease the concerns regarding the yield, obviously impacting future growth, okay, and the cost of obviously credit, etc., etc. And that's the reason why the Nasdaq certainly has come under immense pressure. As you can see here, a sell-off around the 13,890 zone to a pivot low of 12,200. It's been quite impressive, but we are into potential support here on the Nasdaq, so keep an eye on this. The work from home trade, the tech trade certainly has come under pressure, given the fact that the vaccinations are working, they're cutting the death rate, and obviously going forward in terms of herd immunity, whether you believe that or not, or whether you're into the concept where obviously we're going to have third, fourth waves, and eventually it just become a normal flu-like obviously scenario going forward. So keep an eye on that. Again, concentrate of flux. Okay, in terms of the Dow certainly has been relatively weak. We did get a bounce back obviously from that pivot low. Again, next potential support on the Dow 30 or Dow Industrial is 30,000. Whether we break above 32,000 and continue higher on the back of higher yields and concerns regarding a hawkish Fed, again, that's going to be interesting to observe. S&P 500 did find support at the gap fill around 37.15, 37.14, has pushed higher. Whether we sustain that move, again, is a different story, or whether or not we potentially put in a market top. So left shoulder ahead, this is your right shoulder now. So how high do we go? Okay, keep an eye on this potential pattern, folks. Okay, so your right shoulder, okay, so you got fib 75%, which is around the 3900, and the pivot high is 3950. So resistance, solid resistance between 3950 to 3900. We did get as high as 3850. It'll be interesting to see obviously if that's sustained in terms of the rally there, or the short squeeze that we obviously had ensue, but nevertheless it was expected given gap fill support below. In terms of the next potential thrust here, so pivot high to pivot low, we did obviously hit 61%. You got resistance at 75%, and obviously resistance is at 39.15, and then solid resistance 39.40 and 39.50. Are we going to break through 39.30, 39.15? I find it very unlikely, unless obviously there's some real jawboning there with regards to the Fed and coming out exceptionally dovish. I can't see that occurring at all. Okay, so it looks like the hawkish, or should we say concerns regarding yields, that certainly seems to be set in stone for now, and that will certainly keep the market at bay, given the fact, especially with regards to the Nasdaq, the work from home trade certainly has come to an end to a large extent. Now keep watching Bitcoin as well. There's an interesting correlation there with regards to that and Nasdaq. Okay, moving forward now, the biotech certainly oversold quite substantially. We'll look for a potential bounce in the biotechs, but are we all going to retest that 5,500? Very hard to certainly see that happening for now. In the interim, if we do obviously see any potential retrace, then you are looking at a pivot high to pivot low. This is on the semiconductor, this is on biotech, sorry. Any retracement, you're looking at around 38 to 50% on the biotech, so keep an eye on that. In terms of the semiconductors, let's give you an insight here. Okay, here we go. So semicons obviously will due a bounce, given the fact that we've retested previous resistance equals support. Now again, everywhere it looks like we've got a potential H&S formation reversal. Interesting scenario. Okay, interesting scenario. So a lot of that depends on obviously the move in the dollar as well, obviously yields. Now commodities certainly are obviously very frothy right now. Dow Transport's probably the only ones that are certainly benefiting given the stimulus package that was passed over the weekend, so a lot of individuals still buying that at previous resistance equals support, which is certainly understandable. Copper chart looking very let's just say relatively weak for now, given the fact that it's failed to sustain its move higher. The wisdom tree commodities as well, so keep an eye on this index. This is an important index ever since they put in that topping tail. We are seeing solid resistance there. Now yields rising, dollar rising, and also along with oil as well. In terms of light crude, again exceptionally strong so far, but this rally itself is going to unwind very soon. I can't see a sustained move in the price of oil, even though we have obviously passed the fib 75%. At this very juncture we are extremely overbought, and again with the dollar rallying, yields rallying, a more hawkish Fed, this is basically the perfect catalyst for a massive sell-off in oil, which in turn obviously will ravage the S&P, ravage the FTSE, and ravage global markets, given the fact that commodities are now moving lower. Now whether you believe in the commodity super cycle, whether you believe in scarcity, the US-Sino war, they are obviously fighting over resources, minerals, etc. That certainly is helping the commodity aspect as well, but nevertheless extremely overbought, and certainly given the narrative last week with regards to the yields and concerns in the bond market, will obviously filter through in terms of the equity market as well. Let's look at the Russell. Russell again was extremely oversold. Again bounce on Friday on the back of stronger jobs data, which was expected, and certainly looking for a risk off scenario until we got that bounce eventually as well. So how long do we sustain this rally now? It'll be interesting. Again, keep an eye out for key resistance zones on the Russell 2000. So your key resistance will be up here. Okay, you've got gap fill up here. Let's just use a Fibonacci retracement tool for now, and looking at a fib 61 to 75% before we actually obviously continue the thrust or the potential move lower as well. So lower highs and lower lows certainly resume until obviously that's negated. So key resistance will be at 226, but my understanding really is the markets will be under immense pressure start of the week. Okay, we have had a short squeeze rally in the back of stronger jobs data, but can that sustain itself? So all eyes on the S&P. Quickly give you an insight on the S&P going into Monday. 60-minute chart, again bounce, but we're into that fib 61 to 75%. Solid resistance around the 38.40, 38.66, given the rally that we had from that pivot low at 37.22. Almost 120 point rally on Friday, very impressive, but one would have expected that given gap fill obviously support. So again, look for resistance at 38.66, 38.40, 39.15 and 39.30. Okay, going into the 10-minute chart, exceptionally overbought right now on the S&P. Will not be surprised to see a move lower now going into Monday. potential reversal, and obviously once we reverse, potential buyers step in around the 3800 zone. Resistance is seen in this zone here right now, okay, and certainly looking for weakness from the 3850 high level, looking for a potential dip back down to 3800, potential 3805, and then again, like I said, I'll reassess from there. I will be very surprised to see a break of 3900 to 3950 on the S&P, given the concerns regarding the yield market. Again, Nasdaq will be very obviously interesting as well, to see if we can actually get a sustained recovery in the Nasdaq. If that fails, then you'll see the S&P fail as well. So we do need a thrust higher than the Nasdaq up to 13,300, potentially even gap fill at 13,600, but it'd be interesting to see if we actually do get that. The Nasdaq has been exceptionally weak. Certainly has been the weakest link. Now resistance is seen at 12,760. Obviously you've got gap fill here at 13,000, and then obviously resistance at 13,300. Ultimate resistance at 13,600. So it will be very interesting to see if the Nasdaq does start to recover, but very unlikely given the fact that the work from home trade, post the vaccinations being successful, and obviously a lot of frothy nature in the triggered by Mr. McAfee and his fraudulent activity, etc. over the weekend as well. There's reports there, so certainly seems to be a lot of skeletons coming out of the closet ever since Mr. Elon Musk has been promoting all these dodgy coins. Okay, nevertheless, that's your opinion on in terms of how you invest in terms of cryptocurrency. My perspective at the moment, very fishy, very volatile. Certainly not something that I'd like to trade for now. In the interim, it's better to trade that which you have control in terms of risk, and trade something that's less volatile. Okay, wish you the best for the trading week ahead. Goodbye now.